I hope you're all ready to rock and roll because March Madness is coming to the stock and Forex markets. Hello everyone, I'm Kathy Lean, and we need to talk about how to trade the big twists and turns this month. First, the U.S. economy, U.S. markets, and the U.S. dollar are in focus this month. The Federal Reserve is expected to increase the size of their rate hikes from 25 to 50 basis points. Having just gone from 50 basis points hikes to 25 last month, their foot is back on the pedal, and investors are wondering how much more will they go. The first chance at assessing this comes this week with Fed Chairman Powell's semi-annual testimony on the economy and monetary policy. Twice a month he goes before Congress to talk about the economy and monetary policy, and this happens at 10 a.m. Eastern Time on March 7th this coming week, and it can be very market moving. There's no point in taking positions ahead of this speech, but if I had to bet money, I think he'll be hawkish, which would be good for yields and the dollar and bad for stocks. I'll be trading the NFP report along with ECB and FOMC live this month. There's a special link under this video to access the sessions. The smarter trade would be to wait. Usually within the first 20 minutes, everything important that he plans to reveal will be revealed. Stocks, bonds, and the dollar will move, and by 10:30 a.m. Eastern Time, 30 minutes after he begins speaking, the reaction that we should see will be the reaction that lasts not just for the rest of the day, but possibly for the rest of the week. My trading tip then is to wait 20 to 30 minutes after Powell begins speaking on Tuesday to trade the real move of the day. I'll be waiting for the Asia Open, however, because that's when my ZIP trading sets up. And we've been trading ZIP very well, basically notching in another positive month for February. It's been a good time because right after Powell speaks, you'll be trading into the London close, which can get very messy, which is why waiting for the Asia Open may be the smarter trade. Post-Powell moves should have legs for days. Then comes Friday's U.S. jobs report. Non-farm payrolls is always a big release, and after the huge 517,000 print in January, a pullback is certainly expected. The question is by how much? And when it comes to NFPs, it is almost always best to trade reactively because aside from the headline number, the absolute amount of job growth, earnings, revisions, and the unemployment rate can affect how investors respond. This will be especially true for this month's report. The great thing about trading non-farm payrolls is that we often see big trending moves on Friday after the initial jobs market volatility. Always wait 5 to 15 minutes after NFPs to get into a continuation trade because there will definitely be wild swings. And yes, listen to those magic words. Continuation trade, not fade trade, is the way to go. After that comes the U.S. inflation and retail sales report next week. In many ways, the inflation report is even more important than NFP and retail sales because high sticky inflation is the Fed's biggest problem. It'll be very market moving, and there are opportunities to trade both ahead of the release if you're betting on a strong CPI number and after it. One thing to keep in mind is that even if CPI is lower, the sell-off in the dollar may be shallow because investors are convinced that overall inflation is too high. The CPI report will also set the stage for how the dollar trades into the March 22nd Fed meeting. Then comes the European Central Bank rate decision on March 16th. They've made it very clear that 50 basis points is coming in March with, quote, significant further rate hikes necessary. Does that mean 1, 2, or 3 more rate hikes? That's what investors will be trying to focus on when the ECB president speaks. I think there'll be opportunities to buy euros ahead of ECB, particularly against the Japanese yen, Swiss franc, Australian, and Canadian dollars. Against the US dollar, on the other hand, it can be a little dicey because the Fed is also expected to raise interest rates. Last but certainly not least is the FOMC rate decision on March 22nd. They'll be raising interest rates. The question is how much for how long? The market now sees 4 rate hikes from March onwards, with rates going as high as 6%. A month ago, there's a 0% chance of rates going to 5.5%. The dollar, particularly dollar yen, is a buy on dips for a move higher ahead of the meeting. Then make sure you're out before the London close that Wednesday. Wait until the Fed raises rates and Powell's press conference begins. His prepared speech can be market moving, but we always like watching the press conference because reporters get the opportunity to grill the Fed chair, and anything he plans to reveal is usually revealed in the first 3 questions. Then the big move will begin, and that move should carry over for the rest of the day into the Asia session. Good luck! I'll be trading the 3 biggest events, NFP, ECB, and FOMC live this month because I love to trade news. There's a special link under this video to join the session and access our powerful Newsmaster Plus MT4 5 trading robot. Don't forget to subscribe and hit the bell to get notified for updates.